Good turnaround Tuesday, Warriors. How's everyone doing? Hello, Patrick. Craig, no more daylight savings time. Are you in Australia? So it's early. It's only 11:30 at night right now. Okay. So, we look at this current political environment, geopolitical environment, and, where an attack on Syria, some type of retaliation, which the president said is going to happen, just not when it's going to happen. On turnaround Tuesday, the two toughest trades would probably be to short the metals. And I think that there is a potential short here. It's tough to do in front of a potential military conflict, but I think you could do it and manage stops, say maybe 342, scale it. But if we start taking out this 1330 level, this very well could have been some type of first leg correction and then down. What also makes it difficult and conflicted for my analysis is coming into yesterday, and on Twitter, I was talking about shorting the Dixie after Friday's negative day on any strength. And, we had a little rally, and here we are, we're breaking down. They better turn it, if not right here, some type of fib retracement, just like it is in the euro currently, right? So the bears are saying, wow, this may not be a bad place to sell the euro, and maybe they're right. But I look at some things like the daily, unless we get a reversal, we're cutting through 50-day moving averages. I'd bet there's quite a few buy stops above this high. We know there's a ton of buy stops above this high. And I still think that this euro could make a new high and that the Dixie could make a new low. Still looking for a potential third drive down to below 88, which maybe takes the euro to 126 or better in that range. And that would flush out every dollar bull. So, and I also know, Greg is still, I noticed during the interview, still think there's one more good dollar rally to come. So I'm thinking one more shakeout every last dollar long that's been trying to bottom pick it since the beginning of the year. And then maybe something more significant happens to the upside. So that makes it tough to short gold as well, doesn't it? And the toughest short would be oil. Okay, I mean, oil, I thought after last week we had a chance to challenge these lows. It looks like a tough short from here. I don't think it could be any more contrarian than to short oil with stops above these highs, preceding some type of missile strike or who knows what with what's happening in Syria. And, there are other players too. Israel is hitting targets in Syria. Hezbollah is sending up drones and trying to take down Israeli jets. So there's a lot of gasoline being poured on this fire, and especially if, a week ago, President Trump said we were going to be getting out of Syria real soon, which surprised his military commanders. And he shifted to, atrocities we won't stand for. So, very unstable type of environment. And, the obvious thing to do is to buy crude, buy gold, and short the market. And when it comes to the market, guys, I don't have the nerves. I just don't have the nerves anymore to trade it. I mean, these swings here, it looked great yesterday and then faded in the last 5-10 minutes. I don't know, just 30-40 handles based upon the raid by the FBI on, I believe his name's Steve Cohn, President Trump's personal lawyer. And then you're watching G, like Blake recommended last night to watch him. And he just said one thing about that we shouldn't go back to the Cold War type of attitudes in the world. And, the S&Ps were up 30 handles. So I guess you just have to, in the S&Ps, have a view and close your eyes or Stelios and I were talking about, you know, maybe being Rip Van Winkle. You know, you put on the position and you go to sleep for a while and watch it. Anyway, that's, you know, mostly what I'm seeing here. The euro is beginning to fade from this 80 level, and we'll see if the gold follows suit. Oh, I did want to touch upon the yen. We did tag this line. It must have been yesterday afternoon. I'm not sure when, but so far so good. It held it. So at least we know on US dollar yen where it could turn bad again. Okay, so now it's looking to me back inside this channel, you know, false breakout type of move, and it looks okay. So, you know, we could still be heading up to the 108 handle in US dollar yen. So any questions on anything I've covered here today? Good? Nothing? You guys all get it? Give me a Y if you do. So basically, I still think the dollar has a magnet down towards that baseline. I still think if that's true, the euro is going to trade 26. Maybe a short-term scalp in gold. I kind of still think gold's going to close under 1308 and give us buying opportunities. I don't know. I have some lines here on gold. It might even be deeper. And I think there's one more washout coming in silver. So, and I'm going to be interested in looking to get long related issues should that happen. But yeah, gold's fading a little bit. I still think we could take out 1308, 1320, 36 bucks takes you to 1290. I have a couple of lines here if I extend this out and retrace levels. Okay, yeah, make it purple. Right there, about 1290, 61.8, 1286. So I'm thinking one more shot down in gold. Some people are even saying we could see 1250 again, maybe 78.6. And the shares are still weaker than the gold. So, of course, everything changes on a breakout to the upside. And I'm very interested if Blake gleaned anything, or maybe with today's action, I wouldn't be surprised knowing kind of how Blake trades it. If he was long euro, he'd be out and maybe scalping it to the short side here. Are you?
Hey, Dale. Actually, you know what? I mean, this has been like the messiest market ever, and so I was short a little euro yen actually, and some comments came out from Nowotny, which he's a known hawk. He talked about basically lifting the deposit rate from negative 0.2%. From negative 0.4%, and then the market was looking at, you know, that it was expecting a 0.1% move, you know, or 10 basis point move, and so that spiked the euro higher. I did scalp the euro to the long side as I was getting out of a euro yen short that I was in, so I kind of broke even between the two, but it's been frustrating. I mean, and I took it off the table. I did just short the euro Aussie, matter of fact, just because it's we got this. I have to look at like a longer term viewpoint, because I'm trying to find things to do outside of the realm of major currencies, because the major currencies are so messy right now. And
got it. Yeah. Oh,
and,
nice.
Yeah, I mean, the euro Aussie's got a, you know, we have to realize they hit 161% extension. We got a little head and shoulder pattern here, but I'm not getting aggressive. I'm not aggressive right now at all. But if it breaks below 159, I might add a little bit.
Would that apply risk on, Blake, if we broke down?
It would. Okay. Yeah, I mean, typically, yes. You know, obviously last night, and I missed most of last night because I was shuttling kids to and from baseball practice last night. But Premier Xi, You know, he didn't come at President Trump very hard. Actually, it was more how would you describe
conciliatory
it?
a little bit.
Conciliatory, yeah. He was he really
or just avoided it. No, it's not like he made any kind of offer to stop the trade war, but he didn't bring it up, and wasn't the key statement. He doesn't think we should return to Cold War values, and
yeah,
like a peace offering.
Yeah, basically like hey, I'm willing to work with the U.S. And so what we're looking for today is to see if Donald Trump tweets any kind of like more of a
garbage. Is that the word you're looking for? Garbage?
No.
Ever hear my Mandarin? This is what she said.
Jump in here. No, more of a victory lap type of tweet to get the market.
Art of the deal, Blake.
Right, to get the markets going again, and the S&P. I mean, let's go over to the S&P here. You were just talking about how messy the S&P was. I mean, you saw, if you saw yesterday's move. I mean, we were selling off yesterday afternoon. We bounced back. Sold, rallied following, the China, the Chinese announced a speech, and then we sold off, and then we rallied back. It's so messy in the stock market right now. It's a disaster out there as far as.
I don't have the stomach for it.
Yeah, I heard what you had to say, and I kind of agree with you. It is a freaking mess out there. There's no follow through. It's kind of a disaster, and so I'm kind of looking at the market as this. I guess we could probably do that. While we're here, I mean, I think you got to trade the fringes of the ranges, and so if the S&P gets up to the 50% retracement up towards 2675, you sell it, and you get back below 2600, you start looking at 2580, and you start getting long because the 200-day moving average is down there. And I think that's the way you have to approach this market at the moment until we have more information about what to do. And when it comes to the majors, when you talk about like currencies, I mean, you look at the euro just rejected the 618 retracement, okay, and that's why I sold it. I literally bought it at 60, sold it at 72, but all that is making up for a loss that I had in the euro yen short, because I was short the euro yen. I'm like, okay, I kind of making it up on the way up, and that's it. It's kind of, you have to let the market, I think, push whichever way it's going to push now, and let it show us the way rather than us make the assumption. Tomorrow today we have producer prices, but tomorrow consumer prices is probably what's going to move the needle. So between today and tomorrow, I think you have to trade very carefully and trade small at this point, and one of the other things, Dale, is I look at, here, like the S&P rallied, you look at the dollar yen's gone nowhere. Now, you pointed out that this support held, but I'm looking at two supports that are holding here. So let me get rid of this dotted line. Okay, so you pointed out this line. See this one right here, and you're right. We did pivot from it, which is good. I mean, from a, if you're trading the dollar yen, that's a pretty important support at 106.60, but it's also channel support. Yeah, so you got another channel here that is also trend line that's holding, and basically while the dollar yen.
And it goes out to 109 or so, the return line, the upper channel line.
Yeah, or 108 and change. Now, just remember, and I have to point this out, that the dollar yen is still in broken down territory, even if we get to 108. Yep. Even if we get to 108 and change, it's still broken down territory. Now, the one thing that would worry me is that, look, you got, you know, Dow futures are up. They're not up 308 points. They're up, let's see, here's Bloomberg. So they're up 279 points right now in the Dow futures, okay? So the Dow futures are up 280 points. You know, you got S&P futures that are up 1.1% or 29 points, you know, 29 handles. The S&P is higher. Why isn't the dollar yen, why aren't we trading at 107.50? And I'm sure a lot of people are probably wondering / questioning that and trying to figure out why the yen is not weaker than it is. It's, you pointed out it's Tuesday, you know, it's turnaround Tuesday. So we're higher today. We were down yesterday, or not even down yesterday. We were actually up, but we gave back all of our, or a lion's share, most of our gains yesterday. We're up right now, but how about if turnaround Tuesday ends up being that we're down by the end of the day? I don't think anybody's expecting the stock market to be down, right? I don't think.
Yeah, I think that no one knows what to expect anymore.
No, I mean, but if you think about all the positive, quote unquote, positive news overnight, no one's expecting the stock market to be down. So what if the stock market is down?
They're selling every rip and buying every dip.
But yeah, but what if, you know, what if the stock market sells off first thing in the morning? You know, what does the yen do? Because the dollar yen hasn't rallied with risk. I would think that the dollar yen breaks below this 106.60. Yesterday,
well, that's a failure then. Then we're to me.
Yeah, it would be a failure. And I think that's something that we need to pay attention to, because yesterday I tweeted it, and I know I haven't been tweeting much because I really haven't had much to say. I mean, you know, the market's been so nasty the last, you know, week and a half. I've resorted to just being in the room and not, you know, tweeting at all. But yesterday I pointed out that the yen, you know, wasn't being sold even as the stock market was higher. And as the stock market sold off, the yen strengthened. Now, granted, we pushed back, you know, because of what happened in Asia. We saw, you know, and in China, the speech, we pushed back, but the dollar yen has been fairly unresponsive. So if stocks do sell off, the yen is at risk of gaining some strength, or, you know, pushing the dollar yen maybe even below this channel support, which that's what I'm really watching. I'm not necessarily expecting it to break down, but it is a risk. And so if we start breaking through 106.60, 106.80, you know, we start coming under some pressure, I'm going to start, you know, looking at, okay, well, you know, the euro yen's had a nice rally right into resistance. The pound yen is making its way to the, as I had been hoping for, making our way to the 152 level, which is the 618. The Aussie yen is at the 618. The New Zealand yen's been damn strong, and this thing's pushing right into resistance here, actually, as we speak. New Zealand yen's pushing higher. The Canadian yen's pushing higher, but we're almost at a 38% retracement as well. So, you know, do these yen pairs stall here and come back down if stocks actually come down? I believe they will. So, but we have to see, you know, we have to see the dollar yen break below 106.80, 106.60 for me to even, you know, be looking at that, you know, for me to be even considering looking at some of these yen pairs on the short side. I just have to point out that what's on my radar is that the yen is not as weak as you would expect. I would have expected the dollar yen to be much weaker than it is, or excuse me, the yen to be much weaker than it is and the dollar yen to be much higher than it is right now, and it is not. So that's something that I am paying pretty close attention to. And you know, maybe it's gold. You know, maybe it's gold that actually ends up moving moving the yen. I mean, the gold is relatively firm. We are in this triangle type of formation, or you know, range bound formation. You know, if gold really starts to pull vault higher, well then, you know, that would signal to me that the yen is going to gain some strength too. And you can see that the gold market is actually quite strong right here. And so as the gold market, you know, continues to gain strength, that's usually a indication that the yen is going to strengthen as well. So again, these are just things that I'm paying attention to, because it's a pretty challenging market if you're talking about the majors. It's a very challenging you know, market to be trading. I mean, you know, hold on really fast. Wow, these guys are so, speaker is so loud. Okay, sorry, I had to turn the speaker down. So the pound dollar is, you know, coming into some trend line resistance. I did short really, fortunately, it was very small, like the smallest position on my board. I shorted some pound earlier as we were we rejected this 78% retracement, but after that news came out with Nowotny, it spiked back up, and I just closed that sucker out. But the pound's going to be facing some pretty key resistance around the 142 levels as well. So that's something that also should be noted. Let's see. Here's the. You know, the Aussie's trying to gain a little strength and keep up with the Kiwi. One of the baffling I think market moves out there has been how strong the Kiwi has been in the face of all of this you know, fairly negative talk with China. I'm surprised that the Kiwi has performed as well as it has in this environment, and I think that's caught not just myself but a lot of us, you know, by surprise to see how strong that this New Zealand dollar is. The Canadian also is doing really well. The Canadian has the head and shoulder pattern. The head and shoulder pattern actually targets 124.50 right there. So you know, we're well on our way. It's not even giving us any rallies to sell into, and that's one of the things that myself, it's like I've been hoping for the dollar CAD to bounce yesterday, so I can sell into some strength, and that's just not happening. This thing is just, you know, bleeding lower, which, you know, it looks like a great short, other than, you know, we're divergent, you know, so I'm hopeful that the dollar CAD, whether, you know, how far we go, I have no idea. You know, we go down here, maybe this is the low, but you know, I'm hoping for some sort of bounce to sell into, and you know, maybe that'll happen. Maybe we'll see a little bit of dollar Canadian bounce soon, which would give us that opportunity. I'm hoping. I'm not necessarily expecting. I'm just more hoping, and that's kind of the stance that I'm taking in this market right now. Is I'm hoping for things to happen, because if they happen the way that I envision it, like the dollar CAD bouncing, I'll find a place to sell it. Or, you know, if the dollar, you know, if the dollar yen weakens, you know, and I'm not saying it will, I hope it weakens, because then I'll start looking at, you know, Euro yen, Aussie yen, New Zealand yen, you know, other yen pairs to trade. But it's right now the market is very messy. There's not a lot of clear direction, and we may not get any clarity until tomorrow's CPI number, which might offer some clarity. I'm hoping, because right now the majors are just, you know, they're so choppy, and it's not clear, not in the least bit. But anyway, Dale, you have any comments here?
Yeah, dollars. The majors are choppy, but they're just heavy, and I mean the dollar's just heavy. So you know, I think that there's one more washout coming to the line that you have on the Dixie. It kind of is down around the 88 level. I have it on the weekly,
Yeah,
Anyway,
87-ish. Yeah.
Yeah, 87 and a half, 126 euro, and get it over with, and then maybe from there, some dynamic will change, and we'll see a dollar rally. But it just, the rallies are weaker and weaker, and they're only, they move sideways to work off oversold conditions, and dollar looks terrible right now.
It does, and but here's the other thing. It's like you look at the dollar this morning. Here's the dollar index. Here, let me get rid of this dotted line.
Yeah, it's like the euro, 618 back of that.
Yeah, so we're at the 618. We're at spike high from over here back on the end of April, or end of March 27th. We're basically testing that. Do you really want to short the dollar right at this moment in time? For me, that's a hard sell. I mean, if I was going to sell the dollar, I'd have to sell some sort of rally here.
Yeah.
Now,
well, I talked about it yesterday using the NFP Friday high as a stop. So, you should have been there. If you didn't have to do it Friday, but I think Friday was such a negative day that it was worth the shot to be bearish against that high.
Yeah, but that's Friday. So here we are on Tuesday. So what do you do now? And that's the question. Is I don't have, I'm not going to sit here and flat out start selling the dollar at these levels. And it may be wrong. Maybe the dollar goes into capitulation mode and we break through 89 on the dollar index. Who knows? I mean, maybe it does. But I physically can't get myself to start shorting the dollar at this very moment in time. And that's not to say that that's the right call. The right call might be short the hell out of it right now because it's going straight down. But I miss, and I like to point this out with traders, I miss a lot of trades because I have a certain protocol. I try to anyway. I have a certain protocol that I follow before getting into a trade, and I there's one thing that I don't like to do is I don't like to chase the market unless it's news driven, that something dramatic happened in the market where it's a game changer. Then you have to kind of get in wherever you can get in. But other than that, I just don't chase. So if I look at the dollar right now, it's dropped for the since non-farm payroll. So people were shorting it or selling it at 90 and change, and here we are at 89 and change. I can't get myself to do that at the moment. Doesn't mean that I need to be buying dollars either, right?
Yeah, right. No, it's always our option to do nothing.
Right. So that's exactly right. So, hey, I'm going to pass it over to Steve. I think Steve's back. Steve, welcome home from your wonderful trip to Rhode Island.
Thank you, Blake. Nice to be back. Yeah.
Okay, not Rhode Island. Far from it.
Rhodes Island.
In Rhodes Island. What a beautiful place that I've always wanted to visit in Greece. So, welcome home.
Thank you.
Yeah, welcome back, Nostra Bulgi.
And to be honest, I don't feel bad for missing the past few days, as you very well said. It's been a few weeks that the market has been quite choppy. So, staying somewhat away didn't actually cost me anything.
It's so nasty out there right now, Steve. So hopefully you can find something to do with some of these exotic or crosses. But hey, I've got to go for producer prices. But you guys have a great day.
Yeah,
Thanks, guys.
Thank you, mate. We have PPI coming in a few seconds, right, Stelio?
Yes, that is correct, sir.
Okay, let's have a look at the data.
We're expecting 0.1% month on month. Let's see what happens.
Okay, let's see what happens first in PPI, and then we have quite a few pairs and quite a few things to look at. I was going through the charts. I came in very early today, and I think there are several charts mostly outside the majors that look interesting at the moment. But we're going to talk about that after we get the PPI print. PPI has the potential of moving the market since the market has been focused on inflation. Unemployment isn't an issue anymore to discuss. I mean, everybody more or less agrees that the US has been
it's higher than expected across the board. So it's bullish.
0.3. The 0.3, yeah, correct. And Canadian February building permits minus 2.6 versus minus 1.3 expected. So bad Canadian data as well. So far, we're not seeing any big reaction out of the dollar. So 3% year on year, the PPI, and the core PPI 2.7 versus 2.6 expected. Okay, yeah, that's quite a strong print. And yes, you know, we've said it many times. PPI is considered a leading indicator for CPI, simply because companies, you know, in the vast majority of the cases, are passing through price increases to the consumer, you know, within a period of a few months. So, okay, that's a good print. And, you know, if that gets combined with a strong CPI print, I think we might see, you know, a dollar positive reaction out of this. But, you know, speaking about the dollar, and I'm not gonna talk a lot about it because Blake has already done so. I just want to remind people that, you know, dollar has been trading within a consolidation. You want to see it as a bear flag. You want to see it as a triangle. Depends on how you decide to draw the upper trend line. One thing is for sure is that, you know, there is nothing, you know, you can look at the dollar and say, okay, you know, this looks bullish. This looks like a bottoming pattern. You know, I can't make an argument for any of that. Even if you look at the RSI profile, RSI has been finding resistance below 60, which is a very typical behavior of a bear market. You usually don't see in bear markets RSI overcoming 60, and the opposite for bull markets. You don't usually see RSI going below 40. So usually, you know, that indicates also that you have a bear market here. As Dale would also say, the fact that last time the you know, RSI was hitting oversold or overbought levels was actually oversold near 20, which in a sense is a confirmed low. And I do think that any way you look at it and you slice at it, the DXY looks like it wants to print new lows, and that's something we have to keep in mind. Okay, now having to do with the euro and the cable, there's nothing to see in the euro. You want to see it again as a bull flag. You want to see it as a triangle. Regardless, given the prior move, I think that we should consider this a bullish consolidation. Chances of breaking to the upside are very high. Cable has already broken to the upside. You know, broke above this bull flag, then it produced a bullish pennant. It's breaking above the bullish pennant as well. So cable looks good as well. And, you know, both of those pairs, I mean, cable and the fiber, pointing higher, since the two of them consist a huge part of the DXY, also confirms that probably the DXY wants to move lower from here. So, you know, that's it. Nothing else to say here. Now, having to do with risk, before I go to some more exotic currencies, because I think there are some opportunities, or at least there are some interesting setups there. I have to say that probably a lot of people are watching this now, or at least can see this now. With yesterday's rebound in the SPX, it's not hard even on the daily chart, but if we go down to the 4-hour chart, it's not hard to recognize that there is an inverted, at least potentially, there is an inverted head and shoulders formation here, right? There it is. And where's the neckline for that? It's somewhere there. So roughly speaking, I would say that any daily close above, let's say 26.65 to be on the safe side, probably triggers this formation and, you know, points higher. So I would be very careful here. It's more than obvious that, you know, the bulls have managed to defend, you know, the 200 DMA and, you know, this previous channel support, the extension of this previous channel support. So I would be really careful here, because, you know, the index hasn't managed to break down yet. And as long as that's the case, you know, we have to respect the overall trend, which definitely has been bullish, and it has been bullish for several years. So keep that in mind. I think today is going to be an interesting session. As Blake said, if for some reason today we close near the lows, okay, you know, that's a strong signal that, you know, the market doesn't have the appropriate bullish momentum to finally produce some kind of a move, and we remain in a choppy environment, and that has the potential of breaking down. But if we actually do keep moving higher today, and we trigger this inverted head and shoulders formation, I think it can get more people interested in buying this market, and it can actually move it higher. Anyhow, even if that happens, I would be carefully watching this descending trend line, because I think in any case that's going to be quite a strong level for the bears in their turn to defend. If we break above there, I think that there are high chances that the market is on its way to new highs. Okay, anyhow, we've already spent a decent amount of time consolidating, so I have no arguments against seeing the market move higher. Anyhow, the next few days should shape that. So that's why I'm carefully watching. Now let's go through the Aussie and the Kiwi. I have to say here, and this was a very important level, the 76.40. As long as the Aussie USD is holding above the 76.40 area, it has the potential of rebounding higher, right? Even if you see the long-term formation, it has the potential of rebounding quite higher, actually, even to new short-term highs. We're currently testing resistance. Resistance is 100 pips higher at the 77.40 level. If we actually break up from here, the next target is the 78.10. The 200 DMA is there. So there is still the potential that the Aussie can rebound from here, that it can find some strength, and you can see that also from the Kiwi, which has remained stronger. The Kiwi has defended the 71.80 area. It has broken above this descending intermittent trend line you see. Obviously, an important area is the 74.36. That has been an area that has contained price twice. And if we break above there, there's no question that we're heading to new highs. But I think that already the Kiwi looks quite good. So you have two choices here in the Kiwi, in my opinion. Either remain neutral because we are in a range, or if you want to take this descending trend line more seriously, and given the fact that we came in this range from a strong move higher, you can even maintain a little bit of a bullish bias here. So commodity currencies don't look bad at the moment, those commodity currencies at least. Now let's have a look at the USD CAD. I still have a position in USD CAD. One of the good things in being away is that I wasn't even really considering my positions. I mean, I still maintain the half of the USD CAD I had established right below 124, 128.40, I'm still holding it, and I'm quite happy with it. The other position I have is the Euro Kiwi, which is also doing good, but I'm not short anymore the Palladium, because Palladium actually hit my revised target at 901. Actually, I'm very lucky because it barely hit my target before reversing higher. It has already moved like almost $50 to the upside. Why was this a very, very important area? Simply because you can see how long back this ascending trend line dates, and it was also confluencing with this horizontal area of support. It was also almost the equality target of the first leg lower with the second leg lower in this, let's call it a correction, because we can't be 100% sure yet. Anyhow, I'm quite happy because this was by far the trade of the year for me. I managed to capture a 14% move in the market, 13.96, I think, something like that. Half of my position, the other half I closed earlier at 1,000. I was short from 1,047, so that was a very good trade, and it worked out perfectly as planned. Now, having to do with the other metals, Blake had a look at them briefly. One thing I have to say is that, in all honesty, I don't see any reason why somebody should be involved with gold at the moment, in the sense that we still remain. It's been a long period that we've been trading within this triangle. In all actuality, we've been trading within this triangle since the very, very beginning of the year. So it's already more than 3 months that we've been chopping around here. We're currently more or less in the middle of this range. my intuition tells me that this has a high chance of breaking to the upside, but that's just a gut feeling. So I don't want to be short or long in the middle of this formation. I'm going to be interested though in getting involved if we close above 1355 on a daily closing basis. Silver also in some kind of a consolidation. It's currently testing resistance, but even if we break above here, there are serious levels of resistance that we have to face. Silver is also in a longer term in what appears a very choppy consolidation. So I would say that silver needs us to be more patient, because no matter what we do now, conviction is going to be really low, and there is absolutely no reason to take positions with low conviction. Now, having to do with crude, because we mentioned it briefly before, Dale, you mentioned it as well. If you remember, I was very clear about crude. I said that I don't like the fact that crude had been producing some quite strong moves to the downside, but what remains a fact, and I cannot overcome this, is that as long as we were trading above this red trend line, this one, which was channel resistance, and afterwards it started acting as channel support, as trend line support, I have no reason to be bearish crude. And in all actuality, I would be very happy in seeing a new high here towards 69, which is the 127% extension of the last corrective move, and then perhaps seeing a reversal. So I like the fact that the correction lower was a channeled one, and it was a well-behaved one. It might have included 2-3 strong sell-off days, but we seem to be breaking above it here, and as long as we remain above this broken channel's resistance, I do think that the chances of a push to new highs are high, or at least that's what I'm hoping for, because my plan tells me that I want to be short crude, but I want to be short crude from a new high. So let's see if actually that's going to play out. 69, as I said, a lovely level for me. I really hope we're going to see it print. I'm going to be more than happy if I see a reversal somewhere there to start building a short position, because the market is going to be super bullish still, and even more bullish than now. Positioning is going to be too extreme, and this usually is the recipe for a disaster for people that are doing the consensus trade, let's call it. So I think we went through the commodities, and let me see. Before I go to exotics, let me go through the cross currencies, the most common ones. Okay, this is the Euro-Aussie, two potentials here. One of them is to continue to the upside as long as we're holding the 158.80 area. That's a possibility, but I also see the potential of crafting here a head and shoulders formation. You can even see it on the daily. So 158.80, I would say, a very key level for the short-term trend, because in the longer term, even if we break below there, the Euro-Aussie remains bullish. But if we break below 158.80, I think that we should at least push lower towards the 156 area. So if you're looking to be short this one, I would wait for a confirmation of a break below there, and I think there will be some follow through coming. Euro Kiwi, definitely heavier, the heaviest of all these crosses. That's why I chose to be short this one. I'm roughly 100 pips in the money because I added to my initial half position. I now have a full position. For me, a key level here is the 166.60 area. It's a horizontal support resistance area. Also, the 200 DMA has converged and is approaching there. So I'm definitely going to get rid of half of my position if we test that area, and I'm going to move my stop loss for the rest of my position. In my opinion, still remains the heaviest of the crosses we've been monitoring. So I think the preferred short choice. Now, let's have a look at EuroCAD as well. EuroCAD was a very nice short, a tough one. Usually those are the ones that produce the best moves. toughest trades. But it was looking good. Why? Because we had this internal, let's call it, trend line. We overthrew it a couple of times. We then had very clear RSI divergence. There was an obvious loss of momentum, of upside momentum. The index was definitely very overbought, and not index, the currency was very overbought, and that's why we saw this snapback. We then broke below this ascending channel, and we're now correcting lower. Now, I don't see yet an indication that we found some kind of a bottom. This is what we were looking for, so perhaps a move towards the 38.2. Because at the very least, and then see, I wouldn't be surprised if as a corrective move unfolds even further, keep it correct quite lower from here before actually resuming to the upside. A very important level, in my opinion, is 153.60. We obviously are quite far away from it, almost 300 pips. Doesn't mean we're going to make it there, but as I said, I'm not seeing yet the indications that EuroCAD is reversing to the upside, is resuming in essence the bullish trend. So I would still refrain from buying it here. Now let's have a look at the pound crosses, and then we can go to some more exotic currencies. This is the pound Aussie. Not sure yet of what kind of a formation we have here. There was a likelihood this was a pennant. There is a likelihood that this is some other type of formation, like a bull flag or something. But definitely, it doesn't look heavy. So, I mean, it looks much better than the equivalent euro crosses. It looks like it wants to break to the upside and resume from there. So I wouldn't be bearish this one unless we get more indications that there is some more weakness. I mean, that the bears are, more determined to actually do something here, because so far I'm just seeing a consolidation that should eventually break in the direction of the trend. Pound Kiwi, a little bit heavier, but still, once again, this looks like, some kind of a bullish consolidation to me. We're holding also this ascending trend line support. So in all honesty, not seeing a reason why I should be bearish this one. It is correcting lower, but nothing here that indicates that this is anything more than just a correction. Doesn't look like being the beginning of a bear, leg lower or whatever else. You never know with the markets; it might evolve to something different. But so far, I'm not seeing something that would make me worried if I was long. And this is the pound card. I haven't looked at it in some time, but you can already see that this had also overthrown this ascending channel, also had broken above this horizontal area of resistance. Now, I don't think that the move lower is really impulsive in any way. I think it's corrective. As long as we remain above 175.30, I know it's quite lower, but as long as we remain above there, in all honesty, I wouldn't be shorting it. I would be, if I wanted to do something with it, which I'm not looking to do something with it, I would probably be looking sooner or later to buy it. Okay, now another pair that a lot of people were looking at was copper. Not pair, actually, this is a metal. So another metal that everybody was looking at was copper, because copper was looking like it was breaking down, and it was looking like it was in serious trouble. Especially that day, it was the 26th. It was the end of March in essence. But as you see, we talked about it that day here on the webinar, and I said that, listen, I understand it looks bad at the moment, and yeah, if it breaks below that area, that 293, 295 area, I'm going to start getting worried that something different is unfolding here. But that was a very nice confluence of supports, and if it manages to hold this, it still keeps a bullish profile. And we've seen a very nice rebound from here. Of course, that's not enough because once again we have to face this descending trend line. We have to face this horizontal area of support resistance. So I think that the test for copper is going to be somewhat higher, let's say 317, 318. But if we break above there, I think that we can be quite optimistic that new highs are coming and another push to the upside is underway. Also, you have to keep in mind that we never actually reached oversold levels in this corrective move. So, this corrective move having to do with the RSI was also behaving, quite nicely. So I think that copper looks fine. I mean, it still has a good potential of resuming to the upside. Okay, now since we had all this, China talks and the trade wars, etc., let's have a look at the Chinese yuan with the USD. We've said many times here, we were looking at this triangle. We've said that, it's more than clear that the USD CNH has been bearish since the very beginning of 2017. It actually found a high when the Euro USD found a low, and it has been moving lower since. As you see, technically speaking, it has been acting very nicely. I mean, it's been producing consolidations that they break lower, and again consolidations which break lower. We had a triangle, it broke to the downside. We are rebounding in a fashion that definitely doesn't look impulsive, and we seem to be getting rejected from the triangle's support acting as resistance and the 50 daily moving average, right? So in all honesty, I don't see any reason why you would want to turn bullish this pair, at least not here, not now, and not with what I'm seeing, from a technical perspective. Now, let's have a look at the USD with the Singaporean dollar. Same deal here, you can see it. A strong downtrend. This is likely another triangle, which means that a break below 130, 130.50, I think will open another leg to the downside towards the 128.30 area. So the dollar remains very weak against those. But on the other hand, if you want some commodity currencies that the dollar has been strong against, and we've been talking about them, one of them is the USDT Turkish lira, which has been pushing to the upside. This had a perfect formation to trade at. We had talked about it many times. It was this range. As you see, the USD Turkish lira tends to trade in a very technical way. It likes very much to channel. So, once we broke above it, we said, this was a range that, and once it broke, if it broke to the downside, it could produce more weakness towards this major ascending trend line. Otherwise, it could keep consolidating until it did something like that. But if it broke to the upside, it would definitely produce follow through, and you can see the follow through. It's been trading now to all-time highs. Next target is the 414, which is the 161.8 extension. So this is quite, quite an interesting trending pair to trade. At some point, obviously, sooner rather than later, we might see a corrective move lower, in which case I would be looking for support near the 4 area to be buying again. And I wanted to show the USD ruble as well, because we've had this impressive move to the upside. Right, this is a game-changing move. You can see the past 2 days, these have been huge moves to the upside. We actually broke above this formation, which initially looked like it would end up being a continuation formation to the downside. But, having sliced through it like butter, I think this is a game changer. I would be looking now, after such a move, I would be looking for supports to be buying the USD ruble and not the opposite. So this would be an area of interest, obviously, right? I think that moves lower towards there would be good buying opportunities. Okay, I know that many people, don't have these pairs on the radars, but I think that's a mistake because very often they trade in a very nice and technical way, and they produce very nice moves. And once they break key technical levels, they tend to move quite a lot, and that's always nice. Now the USD ZAR as well is one I want us to have a look at. USD ZAR, we said how bearish it is once we break below, once we broke below here. There you go. And in my opinion, this is another consolidation, a bearish one. So I would be looking here for resistance. And if we do get rejected from here, I would be looking to new lows. Okay, let me go through a few questions and see if we have anything else we need to. Okay, I already see a question about the euro, Turkish lira. Who do we have for an interview today, by the way, Dale? Okay, I don't remember, mate, if it was you asking me about the euro Turkish lira, Abdul, but I remember there was a friend here in the show asking about the euro Turkish lira, and I was very clear about it. I said that, listen,
We have the king of the broad formations, Anthony Allen at 3X Traders.
Okay, very nice. Let me know when he's online and it's time, so I don't bleed into your interview. Okay, Dale?
Okay. He's here,
okay.
So, it's about 4 minutes to the top of the hour.
Okay, mate, let me know. So this is the Euro Turkish Lira. This is also an extremely strong uptrend, and you should not try to fade it, right? We were in a range. We said that if we break above it, we should extend, and that's what we're doing. We're trading at all-time highs, and in all honesty, I don't see a sign yet that this is reversing. The geopolitical situation, since I live in Greece, I'm nearby, so I'm more aware of what's happening here. The geopolitical situation with Turkey is very complex. I mean, there are a lot of issues with Turkey at the moment, and even from a macro perspective, I really see no reason why the Turkish lira is going to find some strength. At some point, of course, as any major move, it will have some corrective. It will produce some corrective moves. There's no question about it. But from this point on, even if we see a move lower, I would be watching this 472 area as support. I don't think that it's going to be easy breaking below it. And as I said, I think you should keep looking to the upside. As you see, RSI keeps hitting over both levels.
All I can say is Turkish lira keeps going to new highs, which is a weak lira, right? And so all I have to say is again.
Yeah.
Steve.
Yes, Steve.
Sorry to interrupt. By the way, it's exactly what you're saying is exactly what I wrote in the chat room like 10 minutes ago. As long as Erdogan is in power, and as long as things continue as they are, I don't see the lira recovering at all. Maybe there's going to be a small pullback, but really that's going to be an opportunity to short the lira again, in my opinion.
Yeah, absolutely. I'm 100% in agreement.
He's not going to look to retire, so they'd have to retire him in some way. It would take a revolution. Wouldn't it take
That's exactly as you say it, Dale. Erdogan is not one of the people that will leave power on his own. But I've been watching Erdogan since many decades ago, at least more than a decade ago for sure. And his slow ascent to power, and initially he was a moderate. He was looking like a person initially that would probably modernize Turkey, but he slowly transformed himself to something very different, and he has also become more or less a megalomaniac. I'm afraid. I don't really care, but I think he's going to have a bad end, as many equivalent cases that we've seen globally. He's now playing, in my opinion, his last major card. He has aligned himself, yes, exactly, with Russia. But, that's a very dangerous move. And the reason it's a very dangerous move is the following. Putin is a very powerful ally. There's no question about it. But Russians are Christian Orthodox. They are Muslims, and he's all for Islam, etc. What I'm trying to say is that Russia, for Russia, he's a convenient ally at the moment, but he's not the traditional kind of power that will be aligned with him in the long term. As long as he's a convenient ally for the area and the territory, and as long as focus is in Syria, Putin is going to play along. But afterwards,
what side did Turkey fight on in World War II? I know World War I, they were allies with the Germans, right?
Correct.
How about World War II?
I think more or less the same.
Same, okay. So then they have an adversarial relationship through 2 world wars.
In general, the most important thing is that Erdogan has, in essence, been isolating Turkey more and more from traditional powers. That, at some point, he was looking like he was actually wanting to push Turkey towards Europe. And he had a very good relationship with decades with the US. And, as it seems, he's now turning his back to them and playing his cards and betting on the fact that Putin is going to be a great ally. And as I said, he can be in the short term, but what happens later on? When,
I only knew that, Steve, because the movie Lawrence of Arabia, Lawrence had to defeat the Turks with the Arabs.
By the way, for whoever hasn't seen this movie that Dale just said, Lawrence of the Arabia, you really should. One of the best movies. You've watched it, right, Dale?
Yeah, I recommend it. So now let's look at some broadening formations. It's great to have you back, Steve.
Absolutely. By the way, let me answer just this, because I had already switched my chart. A friend is asking what's happening with the pound yen. Pound yen is approaching a confluence of resistances. We have the 61.8 at 152.20. We have this ascending channel. We have a horizontal area of resistance, as you see there. I think it's going to be quite tough for the pound yen to crack through that. And any failure up there, I'm really, really interested in shorting it. So I really like the potential for a short trade in the pound yen, and I'm very closely monitoring that. Okay, thank you, Dale. Enjoy the interview, and we'll talk more in the chat room. And obviously tomorrow I'm going to be here as well.
And I found out from Kareem, I believe, it was Abdul, that Turkey was neutral in World War II.
I said more or less because in World War II, neutral, there is a big conversation we can have about that. Yeah, they didn't participate directly in World War II, but definitely they didn't help. Okay, it's a big conversation. Yeah, they didn't help the Allies. In some sense, they actually helped the other side. Officially they were neutral.
Yeah, like the Vatican. Okay.
Yeah.
Anthony Allen, my trading warrior brother. I'm going to make you the presenter now, buddy. And I'm looking forward to seeing what's on your radar. It's been a while since we've had a conversation. I love your work on Twitter. So I just passed you the ball, my Chicago brother.
My screen.
Hopefully how are you, Anthony?
Monitor 2. I think this is the one we want.
Okay.
Are you seeing the NDX chart there?
Yeah, we got it. Got it. So you're looking. How you doing? I'm doing great, Anthony. Great to have you back here. I love your work. You just threw me because so much of your work, and we could talk about this, but so much of your work, there are broadening formations, megaphones galore. It seems to be one of your favorite formations, or is it just the way the market structure has been the last few years that more of these formations manifest?
That's a great question.
What you think about that?
A couple of years ago, we were still looking at a broadening formation on the broader market, and right. Which was what I called primary wave D theory, and I was one of the first persons to come up with it. But since then, we've broken out of that pattern, and it's I'm talking about the 20-year chart. I think I've got a chart in here showing that. Well, showing where we broke out.
You mean we broke out, but had an overthrow over it. Okay. Yeah.
Yeah.
Okay.
Well, we went far beyond the top of what. Now here's a broadening pattern. Speaking of broadening patterns.
Right.
And what we thought was this was A, this was B, C, D. You probably see it better on. Let me see if I can find an older Dow chart, because really.
So this is the NASDAQ here.
Yeah, this is the NASDAQ.
But you know, what I teach, Anthony, and I'm wondering if you would agree with me, that, you know, once you have an overthrow, I don't care what kind of line it is, a channel line, you know, flat line, whatever, that the way to play it is let it do whatever it wants to do outside of the formation, but next time inside of it, that it negates the overthrow, which makes people throw up if they're short. That's the entry. That's the trade. Once
that's your stop hunt, right?
Yeah, back inside. Yeah, back inside that.
Yeah, once this, if this blue line breaks, every veteran trader on Wall Street is going to know what to do with it, and I'm sure all the quant trading programs are set to sell that.
Yeah.
So
that's just a little bit above the February low.
Yeah, we bounced out of that. Let's see, this was the January. Yeah, well, we haven't quite tested it yet.
Okay. All right. It looks like it tagged it.
Although this is a monthly chart.
Right.
So I'm not sure exactly how accurate it is.
Yeah. Okay, bro. So what's on your radar? You wanted to start
turn you up a little bit. Let's see, I was just going to try to pull up this broadening pattern since we started there. So probably the easiest way to do this is is just draw a broadening pattern on the Dow. Okay. You can tell my typing is great. All right. So this is a 20-year view of the Dow, and this was the broadening pattern.
Right.
So we thought it came down in the tech crash A, B, and then this was C. But then we took off. We were off to the races above this upper purple line.
Right.
You know, I continued to try to weasel the line up like this, but you could see right where it broke out.
Yeah.
So wave D was rolled out there. I know we were talking about that a couple of years ago. Was the broadening pattern still in play? Right. And I don't think it is. Wave D doesn't determine the shape of a triangle, but I can't. This is too powerful for a wave D.
Okay.
And you can see the chart I just updated, or the NASDAQ chart looks like a broadening pattern in wave 5 with a throwover, which would be typical. I put a bunch of charts in here. We're watching. I've been watching the Dow more because it seems like a lot of tech stocks are moving the S&P differently than the Dow. And I look at several indexes, but you can see this is still trending down. So I'm trying to think where I should look at my notes.
How did
yeah, we saw the February swoon,
right,
and expected to see a big rally off of that, which we did get that. I thought, let's pull up this chart. This is a chart I sent you, I guess, a month or two ago. Let's see, March. I thought it would trade up into a triangle, not broadening, but into a capitulation wave B, where we could see from there wave C correction, larger wave C correction. And what happened, it was nothing like that. So and the market's whipsawing, and it's hard. It's been hard to get a handle on it. Although we've stayed on the right side of the trade.
I don't have the stomach for trading them right now.
No,
You know,
I like this
I
trading.
was there for, you know, I was there before it broke. I was a little early, and then I sold the first rally. Okay, but now I don't have the stomach for it. You go home, it looks good. You wake up or come in, turn your computer on at 6 p.m. and you could watch 40 handles, and then you wake up and they're up 40 handles. Too much for me.
Yeah.
What's the big picture? What's the big picture here now?
Well, I'm watching this apparent contracting triangle where we're like kind of trending down in here and whipsawing, which kind of points to a triangle. The VIX has kept me on the right side of the trade because the VIX remains in the danger zone. This morning,
even yesterday, Anthony, when we were up 40 handles, the VIX was only down a point.
Exactly.
Yeah, I noticed that.
Okay. Yeah, this looked like a snapback rally yesterday. It sold off into the FBI raiding Trump's lawyer's office. Apparently, on that news, I think we have quant trading programs selling a lot of news. Well, this is my prediction last week: is that we're going to trade at least down into the bottom of this triangle pattern, and I would count that as ABC, because in this position, and this is another broadening pattern, you can see wave C often looks like a triangle. I mean, Elliott wave rules and guidelines tell you wave C can't be a triangle, but in this position it can, and it often is. So I would mark this primary wave C. I'm looking for like a capitulation bottom here where everybody gets bearish, and then
would that take it under the Feb low 2520? I don't have my
yeah, I'm looking for a new low. So let's say it washes out below the triangle to the lower
24.
purple line.
Okay.
Then I'd be looking for a new recent high if this broadening pattern is correct.
Okay. What would change it if we started closing over 680?
Oh, to the upside?
Yeah, we could be
the VIX has to come down, first of all. If the VIX doesn't come down below 1750, I would be really cautious here.
Okay. Yeah, it's sticky here.
Yeah, there's a lot of uncertainty here. This would be the longer term view on the daily candlestick chart, and I don't know that we're going to see 2490 tested, but it's not that far away. If the 200-day breaks and we see a panic move to the downside, that's where support is. That's where real support. If that breaks, then we're going to see it go a lot lower.
Okay. So a lot of either or scenarios in S&Ps. Is it the same in any asset classes? I know that you follow the gold and gold stocks, and gold stocks have been weak compared to the bullion. You have a view on what's happening in precious metals here? I know you actively follow them.
Is there a way they can turn your mic up there?
Turn my mic up?
Oh, that's better. Now I can hear you.
All right. I know that you follow gold and the miners, and the miners have been weaker than the bullion. I was wondering if you have a view on gold.
Yeah, I got a gold chart in here. Gold is consolidating. It seems like everything's consolidating. A lot of things are consolidating. US dollar, gold. Let's see if I can find that gold chart.
Yeah, everything. Everything is sideways.
Yeah, and there's a lot of money to be lost there if you're wrong each time. It's not the best trading, although the VIX has kept me on the right side of the trade on the S&P.
Okay, and 17.5 is your line in the sand for that might be an all clear for the market if the VIX closes under 1750. So that's a pearl. That's an important level.
Well, I'd say the 50-day on the S&P. You're talking about the S&P?
No, the VIX.
Well, the VIX, yeah, 1750 is my line in the sand.
Okay.
Let's look at the VIX. Remember, we were watching the VIX consolidate in this downturn triangle forever.
Yeah.
And I said the market was rigged, and I believe people were shorting the VIX, driving the market higher as they shorted the VIX
For years.
Yeah, for years. And here it got away from them, and you see what happened. I got a picture of, except, I underestimated what was going to happen here. I saw this top coming, called, sounded the warning bell, told people to short contracts and or get money off, take their money off the table, and but I didn't see the VIX going straight to 50 in a day. And what do we see?
Who could call
3,000 point crash? I mean, well, I think next time we won't underestimate it. When the trend breaks, get short and stay short, and expect the worst. It's a tough call. I mean, support broke on the short-term chart, and then the 60-minute chart, and I mean the long-term support isn't quite broken. I wanted to show you that VIX chart, the VIX SVIXy.
We have
it imploded. This is the fund they blamed for the VIX shorts getting squeezed.
Oh yeah.
You can see where it broke trend right here, where the stop hunt is.
Yeah.
So I mean, when the trend breaks, there's nothing to do but sell. So I mean, you see what happened here. It ignored this support, broke here.
It can't fill the gap because it's no longer a trading instrument, right? They took it off.
I think they took this off the market. Yeah.
Yeah. So this will be one of the many, very few instruments that can never fill a gap.
Yeah. And I don't think there were any gaps left behind on the VIX.
Okay.
Let's see. Well, the market hasn't quite opened, but this morning, like what I'll do is I'll look at my short-term VIX chart, which has been working like a dream lately. And you can see it whipsawing in this broadening pattern. So, and like to find the true support on this VIX, I'm looking at a monthly chart, which has been working like a dream. You can see each month they come in, they short the VIX.
Right.
It's not normal. It's totally been rigged. And so, I mean, here it got away from them. The VIX came down, but it's still above this 1750 level.
I see why you're looking at that.
It's still above 20, and this has just been working like a dream. So, I mean, if we get down below 1750 and we see buyers come in instead of just rush in, rush out, then I would get bullish.
Okay.
So I got short term. I mean, 10-minute VIX chart. It's pretty crazy that's even working. Well, that's natural gas.
Right.
But see the blue line trending up, so the VIX is still trending up. It's whipsawing in a pattern. I suppose it's going to touch 20 this morning on this snapback rally, which is how I see it. But I don't see it getting down below 1750. There's a lot of fear in this market, and that's
how about oil, Anthony?
Oh wait, gold.
Gold, yeah, gold.
I do have an oil chart handy. Oh, I was going to go to my oil chart or oil folder. I find myself charting more and more. Need more folders. This was oil had was a big cause of the unwind, which we saw that coming, or I did. Oil unwound, and you saw that contributed to the February swoon.
Okay.
Since then, we've seen oil snap back. This is the Brent chart.
Right.
To a lower high, which is bearish. I mean, if oil can't get back above there, then I'm going to stay bearish oil.
Okay, so we could have like an ABC back to 60 or something like that.
Well, it went back to 71.28.
Yeah.
And now it's at like 70.40. I think it's up a little bit this morning, but I mean, that looks like a bearish snapback rally to me.
It's a tough trade in front of what's happening in the Middle East right now. Shorting gold, I was saying this morning, shorting gold and shorting oil are probably the two toughest trades in the current news cycle environment.
Mm-hmm.
Okay.
And, so well, here's the WTI. This is a like a 20-year chart.
Right.
And this was the big move in oil up into a little broadening triangle. And where do they sell it at 666?
Someone told me that.
So, I mean, if this could be A, because it looks like a leading bullish triangle. I think the best way to try to call a wave B pullback would be put a Fibonacci tool on it and watch it come back to 41, 40, maybe just below 42.
Well,
I can't see oil breaking out here. I don't know.
That wouldn't be healthy for the S&Ps.
No.
And that would imply a strong dollar, don't you think? The dollar.
Oh yeah. Dollar. Let's get back to.
I thought I was extreme, and I'm talking about 58 in crude. But okay, go ahead.
I think we could see crude collapse, but it kind of looks like wave A with that leading.
Yeah.
It depends which chart view you look at, and so I'm vigilant and looking. This is the U.S. dollar trading sideways.
Yeah. So which way is it coming out of the triangle?
That's a good question. When you trade sideways into a contracting sideways triangle like this, it seems to take forever to resolve itself, and I can't tell you if it's going to retest the high or the low here.
Yeah. Okay.
And gold's trading pretty much the same way.
Do you do anything with the gold-silver ratio and track that?
No, I never have even looked at it.
Oh, okay.
Should I?
Yeah.
I should. All right. Okay. That's good. That's give me something else to chart.
Yeah. So really, you came on here today, and we have just a bunch of neutral markets. The one thing that it sounded like you have the most conviction about is your line in the sand in VIX, and that there's at least one more wash in the S&P because of that before we have a better rally. Am I reading the interview correct?
Yeah. I'm looking for like a shakeout and then a breakout.
Also, your crude has hit a lower high and could be vulnerable to some downside. That also you seem to have conviction about. Correct, buddy?
Definitely.
All right. So, do you have an axe to grind nowadays? Do you have any kind of business model? I think you have a private Twitter for
Not really.
your analysis. Not anymore.
No, I'm just giving it all away free, and which doesn't make me any money, but it's I enjoy doing this. So I don't know. I was looking for a hedge fund a little bit, and I don't really think I fit into something like that. Maybe an angel investor. I'm working on a book, but I'm kind of a perfectionist, and I think you have to do this kind of work. You have to be a little OCD. And so I don't know if the book will ever get finished because I'll never be happy enough to release it.
Oh, well, then I know I have a title for you.
Yeah.
Because, being obsessive and everything, and, perfectionists are a bit anal.
Yeah.
So why not call it My Look as a Technical Analyst?
That's good. That's good. I'm going to change my title on LinkedIn.
Great talking with you today, brother.
All right.
All right, and thank you. You know, we'll do it again, and maybe we'll have some resolutions out of these, you know, consolidation patterns. But you did drop a few pearls on me, so I wasn't sure where, you know, the VIX would give an all clear, and I was kind of leaning towards a failing rally in crude. So you crystallized a few things for me here today. I appreciate it.
What do you think about, before you go, the Treasury yield? What is it, and what does that have to? What is the dollar going to do if the Treasury yield crashes here? There was a lot of worry about the Treasury yield.
Yeah, most are worried about them going up. So you're talking about if they head down dramatically?
I'm saying, yeah, I think it heads down. I think maybe we see QE infinity.
Okay.
If
I thought we would need to see 20-30% sell-off in equities first for that to happen. But what I'm looking for in the dollar is one shake out of the bulls one more time.
Yeah,
for a pretty good dollar rally.
I think that's possible.
Yeah, like maybe 126, 127 euro, and they may be back to 116 or so. I don't know what the catalyst would be.
I could pull up a. Oh, you know what? I would think more about the U.S. dollar.
Okay, go ahead.
Okay, yesterday we were watching the U.S. dollar Canada, and you saw this. One second. We saw the spinning top on the 50-day on this chart, and we saw it come down below there and shake everybody out, but it's still above support. So U.S. dollar Canada, I think, should rally up to this the top in this ABC pattern, just like we saw oil do.
So a break in oil would correlation-wise would support that,
right?
And eventually a dollar rally would support that.
Yeah.
Okay.
See if I had a better U.S. dollar chart. I do have a longer-term U.S. dollar. You know, I totally got that wrong last time we talked. I was looking for another short squeeze in the dollar, and we saw the opposite. But we were watching another broadening pattern there. Let me see if I can just find that chart, the longer-term U.S. dollar, because I do see a U.S. dollar breakout coming.
Okay, and
here it is.
Okay, and you do see one more high coming in the cable. Looks like a 148. Okay, so you have this as a 4-2. All right, interesting. Because you know, one of the e-waiver guys I respect the most is on our team, Greg Horvat. You know, follow him, and he's looking for something similar to what you've just laid out here.
Right.
So, yeah.
I think this could consolidate a little longer. I think it consolidate. You know, we see it consolidating just like the market. And so, you know, is it building a base here? What is this?
I think so. 87.5. I have a formation. I could show it to you. I think it is. Since we're collaborating, you want to see what I'm looking at?
Sure.
I'll take.
There's a closer view. This was one of the scenarios I was looking at last year, and you can see it's whipsawed into what it looks like a wave 4.
Yeah, so that comes in about 7.
Let's see. What did I do with the chart?
All right, here I'm.
Here it is. That's got my screens mixed up.
You got the U.S. dollar there.
New high on the dollar.
Yeah.
And then QE infinity. Well, you know, Kudlow, he's the new what is it, Treasury Secretary or not Treasury Secretary?
Advisor,
financial advisor. He's King Dollar. He's all about the strong dollar, which we really don't need in a deflationary cycle. Which,
you know, I interviewed him, and it was during the primaries, and he wasn't even he didn't even really think Trump had a chance. It's really ironic. But anyway, I just want to show you he didn't, and now he's working for him. So I just want to show you my dollar chart. Okay, and then we're going to wrap it, and I'm going to tell people where to follow.
Oh, here we are. Okay.
Okay, all right, so here you go. I'm looking for one more washout towards 87.5. It'd be some type of three driver to clean it out. It looks better even on the weekly.
I like
You're getting
that.
a wedge. You're getting a wedge. So I'm thinking down here, 126 euro. I don't know, new highs in the pound, and then maybe we get the dollar rally. I'm not sure what the event is going to be, but that's what I'm looking for technically. That help you?
Yeah. It's good.
All right. You could just call me the most patient coach in the cosmos.
Yeah, you really are.
All right. Well, you know what? I really am not. But I'm glad I fooled you. So Anthony, I hope you score on a lot of these formations coming out and continue the good work of showing your technical work to people and trying to help them. I admire that you're doing it without an axe to grind. So anyone still watching or that sees the video, you could follow Anthony Allen at 3X Trader. Or is it
3X
plural?
Traders. 3X Traders.
All right, 3X Traders. So thanks again, Anthony. I appreciate it. Thanks for showing some
market resolves itself.
What's
all
that?
Right. We'll get back together once this market resolves itself.
Okay.
All right.
All right.
Have a great day.
Thank you, Anthony.
All right.
Good hunting, my trading warrior brother. Okay, that's turnaround Tuesday, everybody. Let's see what the oil was coming off a little bit here. Anthony's look, still pretty stiff. Euro's coming off from its 61.8, and the gold is still stiff. I don't know why it's not. Yeah, gold trying 1340, silver still stiff. So we'll see what happens tomorrow. Yeah, it's not a breakout yet. All right, everyone. Have a great day. See everyone tomorrow. Good hunting, and remember, don't just count your pips, count your blessings. The private chat is active and running. See you guys there.